He's not in.
Broad-based selling with declines outnumbering advances today. But from the day's low, the market did recover quite a bit. 100 on the Nifty. You had gains coming through in FMCG, real estate and pharmaceuticals, losses in some of the government companies.
Sona BLW Precision in talks with Escorts Kubota for an acquisition of its railway business. The deal may be done at a valuation of 2,000 crore rupees. Sona BLW is also expected to launch a QIP soon to fund the acquisition. That's a CNBC-TV18 exclusive.
The Defence Acquisition Council has approved 10 acquisition proposals spanning combat vehicles, fast and offshore patrol vehicles, aircraft and fire control radars worth 1.45 lakh crores. 99% of this, of course, is going to be sourced from domestic companies, providing a fillip to local suppliers.
Heavy Industries Minister H.D. Kumaraswamy bats for increasing tariff on Chinese steel imports from 7.5% to 12%, promises to address the challenges faced by the Indian steel industry, while JSPL Chairman Naveen Jindal says that even a 10 to 12% import duty may not be enough to stop the Chinese imports.
Hello and welcome to a fresh new edition of Markets Forward. Off the day's low, despite, of course, the global turbulence. So some resilience, shades of resilience, most definitely once again here. We'll, of course, tell you all you need to know as you prepare for the next trading session. I'm Prashant. With me, my colleague Reema Tendulkar. Reema, hi.
Hi, and we're going to be with you for the next 20 minutes with all the big news, key developments in the Lal Street, the top corporate voices and the events to track ahead. But first, Prashant, market action, not bad, right? Yeah. Considering the global cues we woke up to, the fall, a 4% fall in Asian markets.
Absolutely. And you ended with about a 75 odd point cut. So, yeah, absolutely. This is, of course, resilient. What else can you say? Resilience. And 100 off the Nifty from the day's lowest point. So almost exactly 100 points off the day's low. I think the global cues do assume a little bit of importance because the commentary, will price action in global markets follow the commentary? But the commentary certainly is turned a bit more cautious if you look at Wall Street, around Wall Street actually, be it a variety of reasons, seasonality and everything else. Global cues, if they are positive, if they are good, when we wake up tomorrow morning, then today's low, which is the 25,083, that's about 100 points away from where we left off on the downside. that should hold as well. So, we'll see if that is the case. But for that, you got the globe, which should also be in decent shape, not like what we, of course, had yesterday. Mid caps and small caps ended absolutely flat. The small cap index had a bit of a opposite reaction because the small cap index, after opening lower, had a big rally. So the high for the small cap index was at about 10 o'clock, and then the index came off. The mid cap index, though, sort of dithered, was lower, and then saw some recovery as well. But basically, both those ending absolutely flat. Pharma, real estate, FMCG, some of the top sectoral gainers. So maybe there is a hint of defensiveness there as well, right? Pharma and FMCG. Real estate, not so much. On the downside, you had the PSU names and banks specifically, which actually took a bit of a knock. And we'll talk more about banks a little later. Reema.
The sectors which performed worse were IT and metals, and then you had the CPSC index. The CPSC index was down over 1%, but remember, it's been the best performing index so far year to date. The CPSC index is up close to about 50%, but individual stocks in the PSU basket, particularly defense, continue to do well even in today's trading session. But PSUs on the whole, led by oil and gas names like ONGC Oil India, came in for some amount of profit booking. IT and metals, global facing, ended with a cut, a fair bit, a reasonable cut today. But the advanced decline ratio was not too bad, keeping all things in mind. We had about 1,100 stocks advancing for 1,300 stocks in declining. So skewed in favor of the losing side, but the gap between the two was not very much. But let's also tell you what we have for you on our show, Markets Forward. We start with the top movers and shakers of the day with Vivek. We've got a bunch of stocks on our radar. So those in the defense stocks, which made headlines, banking stocks in focus following the Morgan Stanley note. So we'll tell you more on that. And finally, the big events to watch tomorrow. But over to Vivek, as promised, for the big movers and shakers of the day. Vivek.
Well, thank you so much for that. You actually mentioned that some of the oil companies or the drilling companies were the ones under pressure. But what actually worked for the market today was the fact that oil-sensitive stocks are the ones that benefit from lower crude oil prices. Those are the ones that actually saw quite a bit of a gain in the session. So a lot of the paint companies, a lot of the oil marketing companies, they were the ones that did quite well. Indigo Paints, ending high by over 6%. The next stock on the radar is a company called Jubilant Ingravia. Now, this particular stock ended as the top gainer as far as the NSE 500 index was concerned, and there was also an interesting note from Equirus. They have gone ahead and reiterated their positive stance on this particular name. The other set of stocks was, of course, the shipbuilders. You saw a big rally in them yesterday, and that rally continued today. Follow-on buying, have a look at Mazagon Dock. The stock ended higher by over 7%. The entire pharma pack today did very well. Lot of narratives around this particular space, but have a look at some of the price moves over there. Look at Biocon up over 5%. Amongst the broader markets, Piramal Pharma on very strong volumes up over 10%. Granules, Alchem, as well as Lupin, all of these stocks on the back of various news flow did very well in the session today. The other stock on the radar, that did quite well was Sudarshan Chemicals. Yesterday we did report that this particular stock was eyeing, this particular company was eyeing, a stake buy of a larger global player. There were worries that this could be a leverage buyout, but despite that, today the stock doing very well, up over 4.5%. On the other hand, quite a few laggards as well. Have a look at Federal Bank. Morgan Stanley today downgraded the stock. The stock ended lower by over 3.5%. The entire IT pack, something that you alluded to earlier, all of the IT stocks saw quite a bit of selling pressure, the back of weak overnight queues, Emphasis as well as Wipro among the top laggards. And GICRE, after the OFS was launched today, saw quite a bit of selling pressure, large volumes as well, ended lower by over 5.5%.
All right, Vivek, thanks very much for that. Vivek will be with us in just a bit to give us an exclusive story as well. So stay tuned for that. But let me also get a quick comment in from Mayuresh and Shrikant Chauhan of Kotak Securities, who are with us. Shrikant, thanks for joining, and Mayuresh, thanks for waiting. Shrikant, price action first. How's it looking? 100 off the lows on the Nifty. Is it looking a little unsure here, or you'll be comfortable going long?
Good afternoon, Prashant. I think, despite the losses of 100 points on Nifty, there are number of stocks and trader stocks which are really doing well, and traders are, in fact, they must be happy because number of stocks did really well in today's date. So while looking at the setup of the market, I think since the last few days, even if you see the entire option interest and the option chain, then there was hardly any interest in the market. But based on its technical formation, I think till the markets are above the levels of 25,000, I think we are going to see range-bound sort of activity. In case if we see the market is dropping and closing below the levels of 25,000, then only we can see further more weakness in this market. Otherwise, I'm of the view that it is going to consolidate, and again, we are going to see upward activity in the market.
Okay, let's get to the first stock, which is on our radar, and that's Sona BLW Precision. The stock ended with a gain of about 2%. Now, what Vivek has learned from his sources is that the company is in talks with Escorts Kubota to acquire their railway business. Vivek, what have you learned from your sources?
Good afternoon. A very interesting deal may be in the works. Now, what we understand from our sources that Sona BLW Precision is in talks with Escorts, and we understand that the talks are in advanced stage. Now, this is to go ahead and basically acquire the railway division of Escorts that we understand that Escorts had put on the block, sometime last year. Remember, earlier we had reported that Escorts was looking to go ahead and sell this particular division to the Knorr-Bremse Group, and we understand that the valuation that they were seeking was close to 4,000 crore for this particular division. What we understand from our sources is that Sona BLW, this particular deal may be closer to the 2,000 crore valuation mark, and we understand that this may temper expectations as far as Escorts is concerned. We reached out to Sona BLW, we reached out to Escorts. Escorts is yet to respond to our query, but Sona BLW told us that they have taken an enabling resolution to go ahead and raise up to 2,400 crore, basically to go ahead and do multiple strategic initiatives. They haven't given an exact clarification on this particular development. One thing to remember, earlier this year, Sona BLW had taken an enabling resolution from the board to go ahead and raise up to 2,400 crore, and this particular fundraise, they could do up to 2,400 crore, and the fundraise would be done via the QIP route. We understand that the QIP is in the works and may be launched shortly. It'll be interesting to see how exactly both of these stocks react to this particular development. Escorts, of course, when you're talking about the railway division at the end of FY24, almost 950 crore of top line is what this particular division contributed. That was close to 10.5% of the total top line. So number one, the valuations. Number two, the timing of the deal would be very important to watch. Escorts hasn't responded. Sona BLW has responded. It will be interesting to see when and if this particular deal does fructify.
Vivek, just a quick point. The railway business is doing well, I'm assuming, right?
Railway business is...
so why hive it off? I mean, is it basically part of the corporate realignment after the deal with the Japanese player? I mean, is that what's happening?
What we understand from our sources that, like you mentioned, Kubota as well as Escorts largely want to go ahead and ensure that they gain market share in the tractor division, which is the mainstay of the overall business. But what's actually happened, and in fact, at the end of Q1, instead of both of these companies actually going ahead and seeing an increase as far as the combined market share was concerned, there was actually a bit of a fall as far as that particular segment was concerned for the market share, and you actually saw other peers like M&M gain market share over there. So one of the, what we understand from our sources that one of the reasons for this particular deal would be to go ahead and exit non-core businesses so that they could focus on the core business of tractors.
That, Vivek, thank you very much for that. That's exclusive. Mayuresh is with us, and so is Srikanth. Mayuresh, any thoughts on this deal? I mean, potential deal. Go on.
Yeah, so if it does go through, I think as you pointed out to Vivek, I think the railways business has been doing well for Escorts. As on June 24, they're standing with an order book of almost 880 crores. They've posted a margin on their railway business at 20.5%. And the management expects a double-digit revenue growth to come through. So if this does come through at the valuation that Vivek was speaking about, obviously that provides comfort to an already strong balance sheet. And within their existing two business divisions, which is the agri-machinery business division, the tractors are expected to do well. Sequentially, I think as far as Q1 is concerned, the volumes were higher by almost 20-odd%. They're also expecting, as far as I've read through, lower horsepower tractors as well, which is very, very attuned to Indian conditions because a large portion of Indian farmers own less than 1 hectare of land. The construction equipment division also expected to do well with a lot of infra spends. So to an extent, I think balance sheet looks very, very strong for Escorts, and these conditions are enablers as far as earnings is concerned. So our whole reading on Escorts continues. If the deal does go through at a decent valuation, it might have a sentimental uptick as well.
Okay, margins in the railway business are higher than the margins in the tractor business. Srikanth, comment on the charts for Escorts, Kubota and Sona BLW.
Yeah, I think in this particular space, Sona Comstar is showing a lot of momentum, as well as the stock was actually consolidating, but now it is absorbing the selling pressure, which was around 720-25. So based on its technical formation, I think the stock is heading for at least around 820, 825, which was its previous all-time highest level. But in the long run, I think the stock may even reach the levels of 900 plus. So certainly, I think the stock is gaining momentum, and there is like news flow. So it looks really a very strong candidate to buy and hold.
Okay, I got that. We're going to focus on another sector, which is the defense space. So up move, especially in the shipbuilding names. So we had essentially, the Defense Council approving 10 capital acquisition proposals worth about nearly 1.5 lakh crores. Upasana is here with details on this. Upasana, over to you.
Defense stocks continue to remain in focus as Defense Acquisition Council has approved 10 capital acquisition proposals worth 1.45 lakh crores. Procurement of future-ready combat vessels and air defense fire control radar gets the nod. 3 AONs, that is, acceptance of necessity, have been accorded in shipbuilding and aircraft for the Indian Coast Guard, which includes Dornier 228 aircraft, next-generation fast and offshore patrol vessels. And shipbuilding remains in focus as shipbuilding gets the highest allocation, that is about 50 to 60% of the overall contracts. Now, Antique has written a positive note on defense companies. It says that the DAC-approved proposals are meant to enhance the operational capabilities of Indian Armed Forces. This should be feasible as 99% of the announced proposals are to be sourced from domestic industry. This is a tremendous opportunity for India's defense manufacturers and hence maintains a buy on HAL, BEL, BDL, Mazgaon Dock and Garden Reach shipbuilders.
Thank you very much for that. But the big story today, there were two big ones. One, of course, the global sell-off, and the other one was a sharp decline in crude prices. Crude prices corrected 5%, and now they've erased all gains for the year. There were lots of, there was an impact on individual stocks like paint companies, OMCs. These stocks were higher in trade, but on the other hand, you had cuts coming in on ONGC and Oil India. Oil India down nearly 6.5%. Manisha is now standing by for more. Manisha.
Well, thank you for that. Yes, for the month of July and August, it was negative months for the crude oil prices, and September has started exactly on that note. So if you look at the high of this year, it has been at 87.5. We are trading at 73 right now, with expectations that $70 a barrel for the Brent prices could be a possibility. With 5% overnight declines, we are now trading at a 9-month lows in sense of crude oil prices. And this is on the back of lower economic data from China, whether it was about manufacturing PMI or services PMI. Both those numbers were on the weaker side. Add to that the fact that the OPEC and allies are ready to start pulling back their voluntary output cuts from the month of October until September 2025. So you will see 180,000 barrels per day additional coming in from OPEC members from the month of October onwards, and that's weighing on. Apart from that, the Libya unrest seems to be looking at some resolution, and that would also bring back production and exports. When you look at the numbers in the last couple of weeks, we saw the production decline from 959,000 to 591,000 barrels per day. So this supplies will start coming into the market. In addition to that, the July output for Libya was 1.28 million barrels per day. So if you're looking at those supplies also coming into the market, then you are looking at higher supplies in the space here. And it's not just about the crude oil prices. Gasoline fell 6% overnight. That one is trading at a 32-month lows. The U.S. summer driving demand season is over. And even with that, the supplies in U.S. are strong at 218 million barrels per day. And then you also have the heating oil prices. They also declined quite sharply overnight. Those are trading at a 15-month lows as well. So whether it's about crude and crude products, everything really seems to be declining right now. And the markets would be watching out for the dollar movement and the U.S. non-farm payroll data on Friday. But the expectations still are that you could see further slide here.
All right, Manisha, thank you very much for that. And absolutely, that's a big one, right? Now, Bajaj Housing Finance's 6,560 crore IPO will open for subscription on the 9th of September. The issue will consist of a 3,000 crore rupee offer for sale and a fresh issue of 3,560 crore rupees. The management told us that the capital raise so far has primarily been sourced from the parent company, that is Bajaj Finance. They see a long runway for growth due to the opportunity in the housing finance space. Listen in.
Clearly, the RBI requirement, given our size and being in the upper layer, was to list before September 2025. But what's equally important is that while Bajaj Housing Finance is only a 7-year-old company, as you mentioned, assets as of 31st March 24 at 91,000 crore, the fastest growing housing finance company, the largest non-deposit taking housing finance company. So it becomes important to diversify our sources of borrowing as well. Our capital has all come from the parent, that is Bajaj Finance, the last 7 years. So it's a combination of size and the RBI requirement, both I would say. But we think for the next couple of years, this should suffice. And as you know, we have the requirement to dilute 25% over the next 3 years. And depending on how growth is going in the coming years, we'll take that call between primary and OFS.
Mayuresh, for investors who are watching, does the Bajaj Housing Finance IPO make sense? Yeah, your thoughts?
Sure. So I think the numbers are solid, no two ways about it. And the business segments that they are into specifically warrant a case that as interest rates will head lower, and because of their strong credit ratings and capital adequacy that they possess because of their parent, a large part of their growth will be driven through over the next few years. So I think it looks like a solid growth where earnings should keep on continuing. And outside the space, in my opinion, again, I think PNB Housing, Prashant, where they are trying to get into the aspire and emerging segments, which is a huge, huge segment where the management belief is what they have achieved so far in terms of their NIMs, which has remained extremely consistent, and getting into these newer segments with better NIMs going forward and better risk management. I think that can be a good call in terms of their retail spread as well. So yeah, I think Bajaj housing IPO looks like a good one.
Okay, got that. Shrikant, just a quick word, if you will, on some of the movers today, right? I don't know if you saw, the biggest volume-led loser was Thangamile. You don't see it on the volume board. Price moves, yeah, I mean, it does go up and down. That was a big one. These banks, right? RBL was down 4%. Federal was down about 3.5%. There was something like a Lemon Tree, which continues to be under pressure, about 130 in terms of trade. Anything catch your eye?
Yeah, I think so. Like in this particular, if we go through with these losers, then in that we are seeing some downward sort of activity in Federal Bank, especially. It was actually into buying momentum, but suddenly since last few days, if we see the its technical pattern, then it has formed multiple times lower top, lower bottom, and today it has broken the important support levels, which was around 190. So I am of the view that we are going to see further more weakness for Federal Bank. I think the stock can fall back to the levels of maybe 180 or 175. But I think it's a correction that we are seeing in these stocks because we saw good amount of rally also in last 2 years. So it's a correction to the entire rally that we saw in the past. I think if we see these stocks are falling to their important support levels, then we should look for adding them. But at these levels, it is better to stay away because they are cracking from the highs.
Okay, thank you very much, Mayuresh and Shrikant, for joining in. That's the view coming in on individual stocks. Get into a break. We'll come back and tell you the top corporate voices along with the key market events to watch out for. Stay tuned. Heavy Industries Minister H.D. Kumaraswamy has said that he will try to convince the Finance Ministry to raise the tariff on Chinese steel imports from 7.5% to 12%. The minister said that the manner in which China was dumping steel into India has hurt the growth of Indian players. However, BJP MP and steel tycoon Naveen Jindal has said that even if the import duty of 10 to 12% comes through, it may still not be enough to stop the Chinese imports.
One side, rates are coming down. They are suffering, our Indian steel manufacturers. Another side, China's dumping huge quantity. They are facing the problem.
How much duty have you sought?
No, I am not sorting. I am not requesting. Industry, they are requesting. Now it is 7.5% tax is there. That actually they requesting Finance Ministry to raise it to 10 to 12%.
So the minister spoke about raising it for 7.5 to anywhere between 10 to 12. Will that be okay for the steel industry?
That would not be enough, because these prices, see, if they were selling at, and we put say 12.5 or 15% duty on the price at which they're selling in the domestic markets, it would be fine. But the market they're losing more than $100 per ton when they are exporting, and which is being subsidized by their governments as per the information that we have. So that's an unhealthy prices. They're not realistic prices. Those are just prices for dumping of their material to protect their domestic industry.
Okay, well, government saying, well, they'll lobby for this. Industry saying, well, more is needed. So we'll see how this one goes, but that's a developing story. Let's get you some corporate commentary that we got through the course of the day. Fortis Healthcare Management was with us earlier, and they told us that High Court hearings on the long pending IHH Healthcare open offer is ongoing in the High Court. They promised that the resolution is expected soon, sometime over the next 2 months or so. The other case which is going on is about the Fortis brand, which was previously owned by the erstwhile promoters. Here as well, they're hopeful that given a correct offer from Daiichi, they'll be able to actually go ahead and acquire the Fortis brand.
Raymond Lifestyle is all set for its D Street debut. CEO Sunil Kataria said that they're aiming for a 12 to 15% growth rate over the next 3 to 4 years, and they plan to double their EBITDA in the next 4 years. The company is also aiming for a high double-digit growth in branded apparel business driven by store expansion. In fact, the companies plan 500 new stores in the next few years.
Well, Blue Star was with us as well, and they sounded pretty optimistic about a strong festive season ahead. They're expecting between 15 and 20% growth in the festive period. The company does not foresee significant discounting during this period and anticipates double-digit growth in the entirety of the second quarter. Okay, and before we wrap, let's get you some of the key events to watch out for as we come back tomorrow. Upasana's got that list. Upasana, over to you.
Let me start with the economic data. US markets will be reporting its initial jobless claims, S&P Global and Composite PMI, and even weekly crude oil inventories by EIA. Now let us look at what are the key stocks that we'll be watching out for tomorrow on the back of corporate action. First up is Reliance Industries. The board will consider issuing bonus shares in the ratio of 1:1. Wellspun Enterprises will also be in focus as board meet is scheduled for tomorrow for raising of funds. Matrimony.com will also be in focus as board meet is scheduled for tomorrow to consider buyback of shares. And Sapphire Foods India, the stock split will take place in the ratio of 5:1. Aarti Drugs Limited will also be in focus as the company goes ex-date buyback of shares. And lastly, NIIT Limited will also be in focus as the stock goes ex-dividend. Now, in terms of important listings, remember, Raymond Lifestyle Limited gets listed tomorrow. Hence, this is one of the key important event that we'll be watching out.
All right, Upasana, thank you very much for that. So, a list of things to watch as we come back tomorrow. But of course, the big thing is going to be if global markets stabilize a little bit and the handover is positive, unlike what we, of course, woke up to this morning. It's a wrap on this edition of Markets Forward. From Reema, me, everyone on the team, it's goodbye. Thank you for staying with us. More news and updates follow on the other side.